So, hey people, I welcome you back to Caroline's Online Academy. This is another video in which we are learning the basic concepts involved in accounting for share capital. And today I have a question in which, in the same question, when the company has received oversubscription, the company rejects certain shares, makes full allotment to certain applicants, and makes pro rata allotment to other applicants. Now, how to account for in a situation where rejection, pro rata allotment, and full allotment are all happening in the same issue is what we're going to learn today. Let me go ahead and read the question for you. SAMI Limited issued 1 lakh shares of rupees 100 each payable as follows. An application wearing 25, allotment 30, first call 30, second call is remaining. So 100 minus 25 minus 30 minus 30 will leave you with 15 rupees. That is what is collectible on second call. The company received 1,60,000 applications. The company rejected 20,000 applications. It made full allotment of 60,000 shares to applicants of 60,000 shares and made pro rata allotment of 40,000 shares to applicants of 80,000 shares. Pass necessary journal entries. So basically, the company has received 1,60,000 applications and made and rejected 20,000 applications. So applicants of 20,000 shares, no shares have been allotted. Their applications have been completely rejected. And to applicants of 60,000 shares, 60,000 shares have been allotted. That is full allotment has been made. There is no excess application money there. And to the remaining 40,000, to the remaining 80,000 applicants, 40,000 shares have been allotted. Understood or not, my dear children? Now, what challenge does this question bring upon is that when there is only pro rata allotment, all the excess application money belongs to all the shareholders, so it will be divided amongst all the shareholders, and therefore it can be adjusted against share allotment calls in advance without any working note. And if there was pro rata allotment and rejection, what you got to do is you have to refund the money received on the rejected applications, and remaining will entirely belong to the pro rata allotment people, and that can be used as excess application money. Now, in this case, when there is full allotment, rejection, and pro rata allotment, you got to refund the excess application money, and you have to find out how much of that excess application money is available for the pro rata allotment people, because the entire excess application money available cannot be used for all the 1 lakh shares, because out of the 1 lakh shares, 60,000 holders of 60,000 shares have only applied for 60,000 shares. They didn't pay any extra money. They didn't make any extra applications, and therefore they didn't pay any extra application money, excess application money, to be set off against calls in advance or share. I'm sorry, to be set off against further calls or share allotment money is due. But when it comes to the pro rata allotment people, those people who to whom 40,000 shares have been allotted, they had actually applied for 80,000 shares, which means what, my dear children? They've made 40,000 extra applications, and therefore they would have paid some extra application money. That extra application money we got to use for adjusting against allotment and further calls due. But this extra application money of the pro rata allotment guys cannot be utilized for the full allotment people, and therefore we got to keep under control how much we got to receive from the full allotment people on every call, and how much has to be received from the pro rata allotment people on every call and such. And therefore, whenever a question like this comes up, I always prepare a working note upfront, because there are some people who do this without doing the working note, but I don't believe in that. It's a you can do the calculation on the spot as you do the journal entry and do it, but I don't believe in it. And this is asked a lot of times also in exams, so you don't want to take that risk. If you get used to preparing the working note, you can do it in like 1 or 2 minutes and then be done with the working note, take the numbers from the working note and just pass the journal entries after that. So I think we should do it that way. Understood or not, my dear children? And I also solved questions like this from the previous year board examination and put it in the previous year board examination playlist. I'll also leave under the description of this video questions related to the concepts that we are learning here. Therefore, you can also click on those and see how it's actually tested in the board exam, and how we solved it, and how this working note is helping us solve it in the solve the board exam questions also. Understood or not, my dear children? So let's go ahead and prepare the working note without further ado. It's very straightforward. It's very simple. We are just finding out the excess application money available for each category of shareholders. Understood? It's not complicated at all. Flow. If you understand it, it flow itself in the examination. You will not even have to think. Understood or not, my dear children? So we have three category of people. full allotment people, pro rata allotment people, and then rejection people. Am I right or not, my dear children? I'm going to make a detailed working note here. You can actually skip certain steps in the examination if you want. You can, jump. I'll tell you where all it's safe to jump and not do the full working note. For now, I'm going to make the full working note, okay? So the first thing I would write here is applications received. Now, in total, we received 1,60,000 applications, but the full allotment guys had applied for. The number of applications on which full allotment was made was 60,000, and the number of applications on which pro rata allotment was made was 80,000, and 20,000 applications had been rejected. These numbers I'm taking from the question, my dear children. As you can see in the question, company rejected 20,000 applications and full allotment of 60,000 shares to applicant of 60,000 shares and pro rata allotment of 40,000 shares to applicants of 80,000 shares. Understood or not? And the next thing I'll write would be shares allotted. For full allotment people, shares allotted is 60,000. Pro rata allotment people, shares allotted are 40,000. And rejection people, shares allotted are 0. Understood or not, my dear children? So excess application money. What are excess application money? It is the application money received per share per application multiplied by the total number of excess applications. So what is the per application money? It is 25 rupees. That you multiply with the excess applications. What are excess applications? Total applications received minus shares allotted, and that will be 0 for full allotment people. For pro rata allotment people, it is 10 lakh, and for rejection people, it is 5 lakh. Application money refunded. What is the application money refunded for the full allotment people? We don't refund anything because they applied for 60,000 shares and we allotted 60,000 shares. So we'll just transfer that to share capital account. We won't refund anything. And for pro rata allotment people also, we won't refund because that 10 lakh extra application money that they paid will be utilized for setting off against allotment dues or first call dues as it is instructed in the question. And when it comes to the rejected people, we'll refund the entire 5 lakh. Understood or not, my dear children? The next thing to do would be to make allotment money due. Allotment money due. Allotment money due for the full allotment people will be the number of shares allotted to them, which is 60,000 multiplied by 30, the allotment money per share. That leaves us with 18 lakhs. And for the pro rata people, it would be the total number of shares allotted to them, which is 40,000 multiplied by the allotment money per share. And for rejection people, it will be 0 because we cannot make the allotment money due as we have rejected their shares. Excess application money set off. Now, pay close attention, my dear children. The excess application money set off here would be the lesser of this and this. Okay. The excess application money available is 10 lakh. The allotment money due on pro rata allotment is 12 lakh. Am I right or not, my dear children? So you can only set off what is available. Am I right? So 10 lakh will be set off against the 12 lakh that is due. In case only 8 lakh was due, we cannot set off the entire 10 lakh against 8 lakh dues, right? We'll only set off 8 lakh. So it will be lesser of the allotment money due or excess application money. So you have 10 lakh in your pocket against the 40,000 shareholders name, and they are supposed to pay us 12 lakh. Therefore, I set off the 10 lakh and I'm going to collect 2 lakh from them. Whereas in case this was 8 lakh, then I have 10 lakhs in excess, but still I cannot set off the entire 10 lakhs against just the dues of 8 lakhs, right? In that case, what I'll do is I'll set off 8 lakhs and carry forward the 2 lakh to be set off against further calls. Understood or not, my dear children? For rejection people and full allotment people, there is no excess application money. So allotment money receivable. Allotment money receivable for the full allotment people would be the total amount made due minus the excess application money set off, which is 0. And for pro rata people, it is 2 lakh because the total amount made due was 12 lakh and excess application money set off is 10 lakh and therefore it's 2 lakh. And for rejection, it is 0, obviously. Excess application money after allotment. So what is left? as excess application money after allotment, which can be utilized for further calls. The question instructs us to do so. In case it cannot be utilized, then you'll have to refund that money. And if you see, for these people, there was no excess application money to begin with, and therefore it is zero. For the pro rata allotment people, 10 lakh was available, and the entire 10 lakh has been utilized to be set off against allotment dues, and therefore it's again zero. And for the pro rata allotment people also, it's actually zero. It's not excess application because that was refunded. Understood or not, my dear children? Now, if there was something left here, then we'll have to continue this same exercise for the calls also. If the question has instructed us to adjust against the further calls too. But there is nothing left here in this question, and therefore I'm going to go ahead and solve the question. The first journal entry is very simple, as usual. The journal entry is bank account debit to share application account, receiving application money. There are no complications here. This 25 rupees per application has been received on the 1,60,000 application. So application money received will be 1,60,000 applications multiplied by 25 from the question. So that's 40 lakhs. The second journal entry is very important, my dear children. In all pro rata problems, the second journal entry is very important. We transfer application money to share capital and take any excess application money to whichever account it has to be taken to. So in this case, we first transfer to share capital. We'll debit application account with the entire amount due and credit share capital with the number of shares allotted multiplied by the application money per share, which is 25 lakhs. And then we credit share allotment account. No. Whenever there is rejection, we first do bank account. And bank account is how much, my dear children? 5 lakh from the working note, if you remember. Application money refunded for the rejected people is 5 lakh. And then to share allotment account. It is the excess application money available for the pro rata people. That, as you can remember, for the working notice. Shares allotted. All right, my dear children, the third thing to do would be make allotment money due. We'll make it due for the entire amount. So share allotment account debit to share capital account. Allotment money due. And that would be how much, my dear children? 1 lakh multiplied by 30. And then we got to receive the allotment money, and the journal entry would be bank account debit to share allotment account. Allotment money to receive. Now the allotment money received will be what, my dear children? It is 30 lakh minus the 10 lakh. It is 20 lakh. You can check with the working note. Allotment money receivable is 18 lakh for full allotment people and 2 lakh for pro rata allotment people. That makes 20 lakhs in total. Understood or not, my dear children? After this, we make the first call due. It's only a formality after this, my dear children. It's these same entries that we have passed all this in all of the other videos. Share first call account debit to share capital account. Share first call made due. And the amount, my dear children, is the number of shares allotted 1 lakh multiplied by the first call amount that has to be made due, which is 30 lakhs. So that's done. And the next thing that we got to do is receive first call money, as there is no calls in advance or calls in arrears. And as the pro rata allotment excess application money is got adjusted against allotment itself completely, and there is nothing to carry forward against calls. You can say that there is, this entry is very straightforward. You just receive the entire amount that you made due. So share first call money received. And that will be how much, my dear children? It will be 30 lakhs. All right, then moving on, we make the share second call due and receive share second call money. Journal entry for that would be share second call account debit to share capital account. And the amount would be 15 lakhs, 1 lakh into 15 rupees per share. And for receiving it would be bank account debit to share second call, see 15 lakhs. Understood or not, my dear children? With this, we have come to the end of this video. Uh, I hope you've understood why we prepared the working note. If you hadn't prepared the working note, you would not have made this allocation properly. Maybe you will do it in a problem as simple as this, but in a 6 mark question with some, with a lot of quiz like category wise allocation and all happening, this might not be that straightforward, and you will have to prepare the working note. So it's better that you start preparing you learn how to prepare the working note and what the working note is all about and what we are trying to find out from the work. And that's it, my dear children. So I'll see you in another video with another problem. We'll most probably be moving on to 4 feature. I think I have promised you one problem in pro rata where the allotment money is more than, covers the entire allotment amount due. Excess application money covers the entire allotment amount due, and then it is carried forward to be set off against first call, second call, and all. I have solved problems like that in the previous year board examination questions. In that playlist, questions like that are there. But in any case, I'll also try to post a video with a question like that also. And we'll be moving on to 4 feature and reissue, and with that, we would have pretty much learned all the concepts that are involved in accounting for share capital. Hope to do that for you soon, and we'll see you in the next video. Please do like, share, and subscribe, and comment in case you have any views. You people have fun. Bye bye.